every one of us know that direction is the king of this market. And for you to win on any trading day, you must get the direction correctly. Now, I have done so many videos in the past regarding the direction of the market, how to frame the direction of the market. But I have also discovered that some of you are making this mistake, which is causing you guys to lose money in the market because you are getting the direction wrongly. Okay. Now, this video, I want to help you guys clear all those complications, erase all those mistakes, so that the moment after you have done watching this video, your direction will be very, very much more accurate than before. So let's get started. Now, let me start with the part where so many of you guys are making these mistakes, okay? Because definitely, I know most of you guys have watched most of my videos on direction of the market. You know how I frame direction, just that we are not getting the same result because some of you are making this mistake, okay? Now, this mistake is very, very common among you guys, okay? Now, so many of you guys just know about the concept of direction, just like as I've taught you guys on this YouTube community. You see, all here are direction, bearish direction, bearish direction. We know it from the chart, okay, that, okay, this is how Grace FS frame direction. This is how ICT frame direction. But there's one part you guys are missing, which is context, okay? Context is very, very important. Now, the context means why. We need to understand the why, okay? The why means why should price go to this particular level? Why should the market be bullish today? Why should the market be bearish today? Now, if you understand the concept of why, which is the context of direction in the market, then all this fake direction that the market gives to you, you are not going to be victim of it anymore. For example, you can see, just take a look at typical example here on Euro US dollar. You see this bearish movement, okay? The next day, the market pushed to the upside, all right? Now, someone else can just see this because of they have watched videos on direction. They are looking for bearishness the next day, and then the market keep pushing to the upside. Now, when you go through your chart, definitely you are going to see most of all this fake movement. For example, you can see a typical example right here. After this bearish move, the market kept pushing to the upside. Now, the question is, after this direction has been established, for example, this bearish move, we need to understand, okay, why should we go bearish the next day? Okay, because context is also part of what you need as a trader. You don't just want to focus on the direction only. You want to know why should the market go to a particular level, okay? You can go through your chart. You will see a lot of fake direction in the market, especially this most recent price action we had here in the month of September. You can see so many direction was declared, but the market didn't go to that direction. That's why this video is very, very important, because we'll be discussing so much regarding this context and how you guys can know the areas price you need to trade into, okay? Now, when it comes to movement in the market, okay, movement means, of course, you know, movement means price moving from a particular level to the other. Now, when it comes to movement in the market, of course, we have had some series of bearish moves since the beginning of October up to this very month, this very moment, okay? So the month of October has been a bearish move. Let's go to monthly time frame. You guys will see that the month of October has been a bearish candle right here, okay? We are just experiencing power of three right now. We are just experiencing monthly power of three that is making it to push to the upside. But however, the month of October has been what? Bearish, okay? Now, when it comes to movement in the market, movement means price going from one level to the other. For instance, price started from here to this point, okay? There are two things that are involved when it comes to movement in the market. And this was exactly what I was telling my students on this, our last weekend webinars, okay? There are two things involved. And the two things that are involved are direction and target, okay? That is what aims this movement in the market, okay? When you know the direction, the next thing is target, okay? Because if a direction is declared on the chart and then you look at the chart, there is no substantial target that price needs to trade into, that direction shouldn't be trusted. And this concept can also help us to know that, okay, if a direction is declared, for example, if this bearish direction was declared from this upside, if the market has not achieved the aim, which is the target, we shouldn't pay attention to any bullish movement. For example, there are some series of bullish movement during this period of coming to the downside, but because the market has not achieved the goal, which is the target, then it will aid us to keep sticking to our direction continuously. That's why if you have been following me on Telegram or my WhatsApp page, you observe that I kept posting my screenshot of my selling order on this Euro USD. Now, this concept I'm teaching you guys applies to all markets, not just on Euro USD. It applies to indices, commodities, all markets, okay? So there are two things involved, like as I said, the direction and then the target. Now, to explain these two things, let's just use this illustration I have right here. Let's use this one as illustration, then I will come back to show you guys example on the chart, okay? You see, this is basically how direction works, okay? If a candle close above the previous candle, if a candle close below the previous candle, a direction is declared. Now, the first thing is declaration, okay? Once the direction is declared, that's the first thing. Now, the next thing is the context, the why, which is the target, okay? Usually, if a direction is declared, many price should move to that direction in some series of candles on that time frame. This same concept I'm teaching you guys can also work on weekly time frame or monthly time frame, but we don't go below daily time frame, okay? Like I always tell my mentorship students, direction is monthly, weekly, and daily. We don't go below daily, and then we don't exceed monthly. All we just need is right here on daily, weekly, and monthly. That's why if you are doing top-down analysis, you shouldn't go below daily time frame, just daily, weekly, and monthly. I hope this information has helped you guys, okay? So right now, a direction is declared, which means we should be expecting series of candles to the upside like this. Now, the next important question is, where should this movement stop, okay? Of course, like I told you guys, when it comes to movement, it's usually direction and then target, okay? Now, so where should this movement stop? That is very, very important question. We focus on two things when it comes to target. Now, for the target, we focus on the draw on liquidity. Now, when it comes to draw on liquidity, we have two types of draw on liquidity, okay? Which is internal draw on liquidity and external draw on liquidity. If you understand this concept of internal and external draw on liquidity, then you have mastered everything about direction. So once you come to your chart, you see a direction declared like this. The next question is this going for the internal draw on liquidity or going for external draw on liquidity? And most cases, this is how it works, okay? It's like that's why those market structure you guys use, this is what is happening, okay? Not that the market is actually working with a particular pattern, you know. What is actually happening here is the concept of direction and target, okay? And the target is draw on liquidity. So if a direction is declared here, bullish direction, which just like this illustration I gave you guys here, okay? If a direction is declared here, the next thing is the target, which is the standard draw on liquidity, okay? Now here may not do the justice of what I want to explain. Let me use this one, okay? Now when it comes to internal draw on liquidity, the most important part we use is the fair value gap on the impulse swing, okay? The fair value gap, the volume imbalance. Sometimes you may use other block, but if you want to use other block, it has to be the main threshold of the other block. You know, I'm going to show you guys examples, okay? So we want to start from here. Remember, this one is the same thing as this one I just showed you guys here. This bearish movement to the downside, okay? This bearish movement. So a direction is declared bearish movement. The market has to move some series of candles on this time frame. So that is what we saw here. The market has to move series of candles to the downside. With the moment the direction is declared here, let me show you guys an example. You know, two candles has to be here, of course, all right? So two candles have to be here. The moment you see these two candles on the chart, a direction is declared, all right? Now, once the direction is declared, the next thing is focus on the target, which is the draw on liquidity internally, and most cases it's usually fair value gap. Then once price come to this internal draw liquidity like this fair value gap, what we need again is a declaration of direction, something like this. And once the direction is declared here, the first target is here, all right? But price always exceeds this level, okay? Like some level of pips to the upside. That's why we have a good trending market to the upside, okay? So the moment is declared here, target is here. The moment is declared here, target is here. The moment is declared here, target is here, and so on and so forth. Keep going to the upside. So if a direction is declared, now target is the next thing. Now let's take a look at some of the examples. I'm going to clear my chart right here and then zoom in. Now, I'm going to use this most recent price action as example. Remember, I told you guys, once you know the concept of target, okay? Once you know the concept of target, which is to draw on liquidity, it's going to help us to stick to a particular direction, a particular trend until that target has been eliminated. For example, this was the target on this move on Euro US dollar, okay? All this move that started from this upside October, here was the target. You can see the moment price took out this side draw liquidity, that was when I told my team, okay, you know what? I am done with Euro USD for now. And it's already end of the month. So there's nothing too much thing for me to do because throughout the month, you have been selling, and then the target has been eliminated. You see how beautiful this thing is? So long this target has been eliminated, at this point, the market may consolidate, then declare another direction, which they may be doing something like that right now. If a new direction is declared here, the question is, where is the target? Very, very good question. All you need to do is start identifying all the fair value gap, all of them, because price may use anyone. You don't know the one price we use. So start identifying all the fair value gap, all of them. But the more fair value gap you have, the more advantage, especially if the fair value gap is on the premium side. So you identify all of them and then mark all of them out, okay? The moment price gives some significant, because this thing will push to the upside, okay? So the moment price push above this level here, this range, this candle here, the next thing is we are waiting for price to come back either to this level gap. You see why this thing is beautiful? If price get to this place, until you see another declaration of direction to the downside, like as I showed you guys from the illustration. So you don't stop this movement, okay? You keep following it. You keep following it so long there was no declaration here. And when price get to this point, if there's no declaration, you keep following it until this point here. And once price get to somewhere here and there's a declaration, where is the target? Here. This is the target. You see. All right. That's why if a move is going like this, for example, so long price has not taken out this target here, this draw on liquidity here to the sell side, you see all this fake direction that took place on this daily time frame, you can see price ignored all of them until they came to this target. All right. This is a typical example. This one here, and most especially this one here. This was a fake move because price has not eliminated that target. And the moment it did that, you can see the bullishness start coming in. So this is how price move from one cycle to the other. Once they are done with a particular target, they are done. They are looking for the next draw on liquidity, which they are going to trade into. This is how this algorithm engineer this movement from one cycle to the other, from one cycle to the other. If you need more examples, I can show you guys more examples. But to make this video very compact, I will leave you guys to do more example on your chart. Okay, just take a look. For example, this fake move right here. All right, you see this fake move right here. Let me use this one as another example. After this move has been declared, price traded into the fair value gap immediately. Okay, this is the fair value gap. All right, this is what we call institutional order flow entry 3. All right, institutional order flow entry 3. Okay, so as it created this direction, the market has already traded into this fair value gap. Okay, not this one because this candle has traded into this one. So they used it to tap into the daily direction and kept moving. The same thing here. This candle, you can see this candle. You can see the wick of this candle. Let me zoom it. So let me zoom in for you guys to see. You can see the wick of this candle, okay? Traded below this value one. We just maybe one pip into this value gap and then kept moving. That is how to know if a direction is declared, okay? That's how to know if the market will follow a declared direction or not when there is a target, okay? If there's no target, all you just have to do is just to keep moving. So the concept of target is what you guys have been missing. Those of you that have been getting it wrong with market direction, okay? So start applying the concept of target. Once the direction is declared, look for the target. Once the direction is declared, look for the target. This was what I was telling my mentorship student last weekend webinar, how to look for the target, and which I just showed you guys right now. And for those of you that have been making inquiry regarding the mentorship program, we are already approaching the new month of November right now. So you should know that we are accepting new students. Every month we accept new students. So click on the WhatsApp link in the description part of this video so that you guys can have access to my WhatsApp directly, and then we'll forward you the enrollment details regarding the mentorship program. Okay, the mentorship program is open to everyone. When you come, you need everything, details, structure for you guys to be profitable trader. And not just that, you have access to trade with me weekly on the mentorship trading platform. So I'll see you guys in the mentorship program. And those of you that are new to this channel, make sure you subscribe, turn up the notification button, and I'll see you guys next upload. Peace.